The stock market took a dump on Friday, and it's all because the federal government lied to us. And now, market analysts are concerned that this cover-up could cause a significant market crash as the facts of this come out. And if all of this sounds a bit conspiracy theorist to you, I get it. I didn't believe it at first either. But the more I researched, the more I realized that the deep state has been propping up the stock market for years. They've been doing it by releasing fake economic numbers designed to make the economy look stronger than it actually is. And when the economy is strong, investors buy stocks, which causes the stock market to go up. But it was all a lie, and I'm about to show you the truth. For those of you who are new to this channel, my name is stckmrkt. I'm a former Merrill Lynch and Morgan Stanley investment banker, and I have over 25 years of trading experience. We're going to talk about these lies that the US government has been spewing for years, and how, when the lies became known, it caused the stock market to take a dump on Friday. But more importantly, we're going to talk about how this disruption in investor confidence could cause a sudden and massive stock market crash. So let's get into it. When the official US jobs numbers were released on Friday, they showed the jobs numbers remaining steady and unemployment remaining steady as well. Sounds good. Until you read the actual report. And all the way at the bottom of the report, in the very last paragraph, we find this juicy detail. The numbers for May and June were revised downward by a lot. The May numbers were revised downward from 144,000 to 19,000. That's 87% lower. And the June jobs numbers were revised down from 147,000 to only 14,000. That's a 90% reduction. And this wasn't just a one-off where the government said, oops, we told you the wrong numbers. We said the economy was 9 times stronger than it actually is. No, this has actually been going on for the entire year. In the May jobs report, the numbers for March and April were revised lower. March was revised down by 65,000 jobs, and April was revised down by 30,000 jobs, for a combined 95,000 jobs lower than previously reported. And on the April report, it was the exact same thing. The numbers for January and February were revised downward as well. The January jobs numbers were revised downward by 14,000, and the February jobs numbers were revised downward by 34,000, for a combined 48,000 jobs fewer than were originally reported. So for all of 2025, and we've seen this happen in prior years also, the US government is telling people that the economy is strong, that the labor market is strong, that the number of jobs is high, and then they're quietly revising the numbers downward on the following reports. And the stock market is looking at the official jobs numbers, thinking the economy is strong and the stock market's going up. But all of that changed on Friday because the revisions to May and June were so drastic, they actually made national headlines. And people woke up to what the US government has been doing for years. They've been lying to the American people, telling them that the economy is strong, and then quietly revising the numbers downward when nobody's looking. And for the past year, investors have been buying stocks based upon this lie. But now investors are starting to take another look and trying to figure out just how strong the economy actually is. And they don't like what they see. Investors have started to sell stocks, and they're selling them at a pretty rapid pace. Unfortunately, the problem is a lot worse than it seems. According to the US government, we're still in quote-unquote full employment because the unemployment rate is at 4.2%. And any unemployment number between 4% and 5% is considered full employment. But the number of jobs got revised downward. When the number of available jobs is low, the people who are unemployed have a tough time finding a job. And this causes the unemployment rate to start to rise. And unfortunately, the rise isn't slow, it's actually parabolic. Look on this chart comparing the unemployment rate to job openings. Every time this ratio starts to rise, you get a recession. And look at what's been happening for the past year now. It's been rising. And this chart is from the June numbers before they were revised downward by 90%. When this chart gets updated with the revised numbers, we're going to see this chart look a lot worse, with the graph getting closer to the 1.5 ratio level. And that means we now have more people looking for a job than there are jobs available. And that is what starts a recession. And as companies continue to do layoffs for AI automation or tariffs or whatever their reasons are, we're going to see the unemployment rate rise higher and higher, and things are going to get a lot worse. So what does all of this mean for the stock market? Well, obviously, it means stocks are going to go down. But when and by how much is still uncertain. What I can tell you is that the AI bubble today is actually worse than the dot-com bubble was in the year 2000. And when the dot-com bubble burst, it caused the S&P 500 to fall by 50%, and it caused the NASDAQ to fall by 80%. I'm going to do a deep dive into the AI bubble in my next video, and I'm going to show you how historically every single time the stock market reaches the kind of valuations that we're seeing right now, this stock market is always 100% of the time lower 10 years from now than where it is today. So make sure you're following me and subscribe to the channel and turn on all alerts for this channel so that you can get notified of my next video.